All
Let's do
right.
it. Good morning.
Good morning, everybody.
Right.
Hello,
Good
hello.
morning, everyone. Good morning, good morning, good morning.
Happy Friday, the first day of spring.
Yes.
Sun is
Happy
shining.
Friday. We'll wait for a couple minutes for everyone to join in. I think it just hit 10:30, so see how long it takes. All right.
Good day. Good day to talk about Bitcoin.
Great day to talk
Top,
about Bitcoin today.
topic du jour. Can you see my screen, by the way, Ken?
Yeah, it's not full screen. If you could just make it full screen.
Yeah, it's kind of by design because I want to toggle with the
Okay.
browser.
Okay, sure.
That's cool. Big enough though, isn't it?
Yeah, it's big enough. Yeah, it's big enough.
Okay.
So we didn't really put a topic on the introductory call, but we have been identifying this call for a bit now. We did put something out on Facebook that this call is all about Bitcoin. We're going to talk about Bitcoin, and for those of you who may look at this as a crypto conversation, that's okay as well. From wherever you're coming in on this conversation, and just want to really acknowledge something right off the top of this call that in Bitcoin world there's 21 million coins, right? That there only will ever be. This amount of supply is 21 million. So 21 is a very important number in Bitcoin. And we didn't plan this, but today is March 21st. And we're going to talk about 21 million. We're going to talk about Bitcoin.
There's three of us.
There's three of us, so it's divisible by three. You got seven coming into play. And here you go. You got the supply, and you got 21.7 trillion. I don't know. That's something different.
Let me just preface all this by saying, guys, for any of you guys looking to invest in Bitcoin, I don't know of any two more people who know Bitcoin than Wasim and Cam. These guys know Bitcoin more. They know more about Bitcoin than the vast majority of people will ever learn. Now, why the case for Bitcoin? Why do we hold it, for example, in the Theta Alpha portfolio? Why should you consider it? Because what we went over yesterday was we went over how do you value a company. We use Nvidia as an example. And traditional companies you value, and we talked about this many times, a stock will go up or down based upon the amount of money it makes or doesn't make. Quite simple. Bitcoin is not like that. Bitcoin will not go up and down because it doesn't make any money. It is more of a store of value and other things, of course, as well. But it doesn't make money. You cannot value it the same way that you would do a valuation model on Tesla or Apple or Nvidia. It doesn't work that way. So we want to look at why Bitcoin should be a part of your portfolio or why you should consider it. Of course, ultimately the decision is yours. Why should you consider Bitcoin? What are the merits of Bitcoin? Where may it go in the future? And even the history of where. And so ask as many questions as you want. These two guys know Bitcoin, like I said, more than anyone that I know. If you ever have a conversation with Cam or Wasim and you mention the word Bitcoin, you may go off onto a tangent for a few minutes.
It'll be a long conversation.
It'll be a long conversation.
Yeah.
It's always a very insightful conversation, okay? The question is, why do we want to own Bitcoin? Why do we own Bitcoin? And where do we think it's going? That's really what it boils down to. So I'll turn it over to you guys. Let's get going.
Sure, let's go. That's a good introduction, actually. And yeah, and to add to what Cam was saying, maybe we'll start there, right? Like you hear a lot about this 21 number, so maybe we start there. So what do you see on the screen here, Omar? What's the difference on the left-hand side versus the right-hand side?
Finite versus infinite.
Right. And what you see on the left-hand side is kind of the monetary system that we live in today. And it's controlled by central bankers. It has
Can you define monetary? What exactly is M2 money supply? What does that even mean?
it constitutes basically all the money that is circulating in the planet, right? And it includes US dollars, all the fiat currencies, everything, right? So
So why is it going up? Because government central banks can just print more and more of it, correct?
that's exactly what's going on, right? So central bankers print more money, and we see the side effect of that, which we'll touch on in a second, right, in our daily lives, right? And it's an unlimited supply because you can print as much money as you want. There was a point in time back in history where the money supply was not infinite. It was actually pegged against gold. So you had it was backed by physical gold. So if you want to make more or print more money, you would have to actually acquire more gold.
And that ended in 1971 under the Nixon administration with the Bretton Woods Act. So previously, if the U.S. government wanted to print more money, they had to have the gold reserves there to do so. In 1971, they eliminated that. After they eliminated it, you can see the supply of money has gone up substantially. And now it's kind of going up exponentially because when the Americans, for example, have a $37 trillion debt, well, how do you pay the debt? Make some more money, right? Imagine you could do this at home. Just put your printer on, print some more money. Great. But what that does do is it devalues the value of existing money. So, for example, when you hear someone saying, hey, you know, I bought a house back in 1980 for 3 magic beans and $8, you're like, wow, how is that possible? Right? And now that same house is like $2 million. Well, that is money supply. Now, housing has gone up because of supply and demand imbalance, but the main thing is it's because of inflation. The more money that you print, the less existing money is worth. And as we enter an era where you're almost at an unsustainable level here in Canada, in the United States, and many governments around the world just keep printing more money, you may see the value of existing money go down. Bitcoin, on the other hand, only 21 will be mined in the history of Bitcoin. That's
21
it.
million.
21 million, yes. What did I say? I apologize.
You said
You said 21, but not the million.
Oh, sorry, yeah, 21. So 21 million, and that will be it. Now, the vast majority have already been mined. I think it's at 20.6 or something like that right now.
It's 19 point something, yeah.
19 point something. Okay.
94% of the supply. We'll touch on that actually in the next few slides. But this slide here is just kind of just trying to highlight the dramatic differences between the two, right? One is fixed supply, one is infinite supply, and there's really no upper limit, right? They just print at will effectively. One is controlled by a central bank or central banks around the world that kind of manipulate this at will, and one is completely decentralized. There is no central authority, there is no CEO. And one is controlled by humans and manipulated by humans, and the other is not. It's actually software that runs it, and it's run by nodes around the world that are fully decentralized. It's a brave new world. That's something we need to get used to.
When you say software, it's often, sometimes people look at this as like, oh, it's software. Okay, so it's just a technology. So somebody else could create another software. Why is Bitcoin such an important software? I often like to refer to it like it's a protocol, almost more than technology. And maybe you'll get into that in this slide, but I find sometimes the word software throws people off. They're like, why would what's so, anyone can create a software, right? It's technology. Anyone can create technology, but Bitcoin's more than just technology. And I don't know if you want to get deep into this right now. I just wanted to like highlight that.
No, that's a great point actually, because you're right. Those are two different things. It is software. And that's the reason why there's so many cryptos out there, because in fact, that's exactly what people do, right? They take a copy of the Bitcoin software and they evolve it and they make it their own. They call it Ethereum or Solana or Cardano or whatever you want to call it, Ripple or Cam's coin or Omar's coin. Call it whatever you want.
Trump coin or whatever it is.
Trump coin or Melania coin, right? Call it whatever you want. And that's exactly why the crypto ecosystem has scaled the way it all started with Bitcoin. So yes, software can be cloned. In fact, it is cloned, but those are not Bitcoin. Those are something else. It's like taking Facebook and cloning Facebook. Well, yeah, Facebook is still Facebook, but that thing that you cloned is not Facebook. It's based on Facebook, but it's something else.
Yeah.
Now, protocol is an important word, and I think that we can come back to later. Protocol is much more important, right? And I think that we can touch on in a little bit more detail later. Okay, so let's get past the first slide. So we've already touched on kind of the second slide here, and I think Omar's already highlighted a little bit, right? This is data directly from the actual St. Louis Fed, right? This is actually their graph from the 1960s, and this is a view of what M2 money supply looks like. So this is where they were.
Look at 1971. Happened. That's when we had the gold standard went away.
That's when the printers really went burr, right? So
that's COVID, right?
Sorry.
Where the cursor?
Back here. Yeah. That's when the printers really went burr, right? Because before that, it was much more tame. But yeah, since then it's gone on a tear. And recently, this is COVID,
I can't
right?
see 1971. Which one's 1971?
Down here.
Yeah. And what's that line you were showing me there earlier? That was 2020, I guess.
2020. Yeah, this is COVID, right? When printer really went burr.
Yeah.
More burr than usual. And now you're seeing this uptick again, right? So this is why there's a lot of argument about, okay, the M2 money supply, this could actually affect the stock markets and, give them a little bit of an edge. Bitcoin, sometimes the price of Bitcoin tracks to M2. So there's a lot of conversations around, we could see new highs because of this kind of phenomenon.
Yep.
So, but the problem is a side effect of this, right? Like from a human perspective, we are constantly forced to have to stay ahead of this financial curve. Right? So that means you have to earn your money twice. Like you got to earn your money, that's time and energy, then you have to invest your money, because if you don't invest your money, then your money is being debased by inflation.
Mhm.
So if we look at a visual of what that looks like, and Omar touched on it a little bit, he touched on housing actually specifically. So this speaks to that picture right there. So let me put a data point in everyone's mind here for 1 second. So if you take $100 and you put that in the bank, in 30 years at an inflation rate of 2.3, which is quite reasonable. In fact, that's the target rate, 2%. Your $100 will decay by $50 within 30 years. So in your lifetime, you could see your $100 decay to, by almost 90%. That's the effect of 2% inflation. And what does that look like in reality? Well, what it looks like is like this, like the price of houses, for example, increases. Whereas in reality, it's not really increases. It's not the houses that are magically becoming 6 times or 10 times more valuable. The reality is money is becoming 6 times or 10 times less valuable. So if you plot your world, if you spin your head around like Jeff Booth does, like in The Price of Tomorrow, he says, well, think of everything in Bitcoin terms, then actually the price of your house was very, very expensive in Bitcoin terms. And now it's actually, you can buy a whole house with less 1 Bitcoin. So that's the effect of
I mean,
inflation.
that's just for the record, that 0.4 BTC is 2028. So let's just we're projecting forward a little bit there. So when you say half a Bitcoin and buying a house, that's you're looking at a potential future number, but currently it's 5.8. Just for accuracy there. I just didn't want to.
No,
So
good point.
this would imply that Bitcoin would go up substantially in price from here, because if a house costs 590 divided by 0.4, that's 2.5 times what that would be. That would be roughly 1.5 million, correct? Per Bitcoin.
Absolutely, right? Which is again a reflection of the fact that your buying power, your purchasing power of your money is going down. And you can see that it's not, the funny thing is it's no secret. Like, and I'll give you an example. If you go to the Bank of Canada, right, and everybody can try this themselves, Bank of Canada, they have an inflation calculator, and they actually tell you right then and there, like, this is based on the consumer price index from 1914, and you can plug your number in. Omar, let's try an experiment here. Give me so $100, what year?
Let's try 1971.
1971. Great. 1971 until today, right? So your basket of goods that would have cost you $100, if you took a physical $100 bill, it would have cost you in 1971 that much. Today, it would cost you 8 times more. And that's based on an average inflation rate, real data, 3.91%.
Right. So this means, they're increasing the money supply by 3.91% a year, and that's what's leading to inflation?
That's right. So in 54 years, the value of my money has lost 8 times its value. That's what that's telling me. And this is Bank of Canada data. Like, this is not like something that, you have to go fishing very hard for. And they even explain it to you. Like, you go understanding inflation. Of course, I mean, I'm not expecting people to go read Bank of Canada. This is pretty dry information, but right there, they're telling you like the rate of inflation, right? We are at the bank, we target 2% inflation. And we have agreed with the federal government that this is the best way to promote the economic and financial well-being of Canadians. So it's right there, Bank of Canada telling you your money is going to decay by X percentage every year. So you're going to have to earn your money twice. You have to earn it, and then you have to invest it. Because if you don't invest it, this is the outcome. Sorry, Omar, go ahead.
Well, see, this is like a hidden tax. So not only are we paying taxes, we are also losing purchasing power. So if you don't hold hard assets, real assets, either stocks, real estate, or Bitcoin, you are going to get obliterated when it comes to purchasing power. Is that correct? Because it is a hidden tax. If they keep printing more and more money, and you have $100,000 sitting under your mattress, well, your $100,000 is not worth $100,000. It's going to be worth less and less and less every year.
We see it in house prices. We say, oh, wow, my house price has gone up. Great. But your bill when you go to Costco is 8 times more, right, relative to what you did, 20 years ago. And that's the reality of where we live today, where we are today. In contrast, Bitcoin is doing the exact opposite. So maybe let's get into that. So start with, well, what is Bitcoin? Should we delve into that one? You ready to take this one, Cam?
Oh, let's go. Yeah, I mean, sure, I'm ready.
All right. So what's Bitcoin? First of all, who's this guy on the right here, Omar?
Is that Satoshi Nakamoto?
That's the guy, man, right? So nobody knows who he is. Perfectly transparent, but he or they or she was a real person or an entity, right? And they created this thing, or a group of people. Nobody knows who they are, or she is, or he is. Doesn't really matter at this point. And I think that's by design. This individual created Bitcoin and then left it for the world, literally.
Also, if their identity was known, I suspect they would be assassinated by now. So that's another thing to consider.
And part of the reason for the success of Bitcoin is because nobody knows who this person is. And most people believe whoever it was or they were are probably long gone. Now, in contrast, every other crypto out there, the millions of cryptos out there, every single one of them has a face, has a CEO behind it. The Bitcoin ethos is very, very different. So what defines the Bitcoin ethos? First and foremost is it has to be fair, which means it has to be predefined. The rules are up front. Everybody knows what the rules are. It's globally available. It's finite. We already talked about 21 million. It's distributed. It's peer-to-peer. This is an absolutely crucial term, peer-to-peer. And this is the value protocol that Cam was talking about earlier. So what's peer-to-peer? So Omar, if I'm sitting in a room with you and I want to give you a $100 bill, how do I give you a $100 bill?
You can e-transfer it to me, or you just give me a physical $100 bill.
I'm physically in the room with you, right?
If you're physically in the room with you, you gotta give me a $100 bill.
Right, but if you are in your house and I'm in my house, I have to e-transfer it to you, which means I need to use a bank or a central authority.
Yep,
Why do you
correct.
trust me with giving you $100, but as soon as we have distance, you don't trust me anymore, and I have to use an intermediary. I have to use a bank. I have to use somebody or something else to send you money.
I would say the main thing there would be speed of transaction, not trust.
Well, but you need a peer-to-peer network in the digital world that we're living in. We can do it. I can send you a picture. I can send you music. I can send you anything you want on
Yep.
WhatsApp directly. The only thing I can't send you is money.
Yeah, because the
But
banking
why,
system
it's
is
like they don't trust us, right? Like it's like you're not trusted. Like why can't I trust? Why is that not available widely, right? Why is because there's a centralized control over the distribution of money. Is that what you're pointing to, Wasim?
It's one of the reasons, right? And as Omar said, I mean, some of it had to do also with security and trust, and the technology just wasn't there. So there was really no other way, right? If you want to transport gold, well, you need
Right.
to give it to somebody that you can trust.
Right. It's
So
like it's a service provider,
it's a
essentially.
service provider, so we've evolved from there. So I'm not saying it's nefarious, it's just that we've evolved technologically from that point, but we haven't really advanced to the point where we've looked at the technology. The technology today exists.
Yeah.
We can use cryptography, we can use the internet, and this is where you're talking about the protocol. We've never had a protocol. We have an internet protocol that allows us to transfer data back and forth. We've never had an internet protocol that allows us to transfer value back and forth until now.
Can we stop on protocol for a minute? Because I feel like protocol is the thing that gets lumped in. Sometimes Bitcoin gets lumped into crypto, and there's something specific that I think the protocol is a big part of what defines Bitcoin against crypto. When you think of a protocol is something that is usable across many different applications, and it's a widely accepted norm. It's open source. So an example of protocol would be like Wi-Fi, Bluetooth. These are protocols that you can plug into and just use because they exist, and that's the difference, right? Between say Bitcoin is a protocol that the rules are already in there. The peer-to-peer network, the distributed network, the access, the way it works, the software is the protocol is, help me out here, Wasim, with this explanation.
Absolutely, yeah. I mean,
floundering and all, but
no, the definition of a protocol is something that's well defined, has very clear kind of requirements around how it behaves. You know exactly how to use it, right?
and
There's no
anyone can use
ambiguity.
and anyone can jump in and use it, right?
Absolutely,
Like
that's
anyone can Ethereum or these other cryptocurrencies, they don't have that to the same degree, right? That anyone can take Bitcoin and use it.
right.
It's a simply globally distributed, as you've written in here. That's just a really important point that what separates Bitcoin from everything else is the protocol level. So I get really this is a very interesting part for me.
And you're right. And you know, we spent the last 20 years kind of building. The internet was born, let's call it, in the 80s, right? And then it became kind of mainstream it started technology kind of coming together in the late 90s. It went mainstream in the 2000s, and today it's like a central part of our life. It's
Great.
anchored on a protocol called TCP/IP.
There you go.
Layers, right underneath. It's a protocol. It's a data transfer protocol. That's it. Everything on the internet uses TCP/IP. That's just a protocol, how it evolves. And by nature, protocols evolve very, very slowly. You
Right.
do not want to disrupt the protocol because that's the layer that everything is built on. So, but what is missing in the internet is a protocol that allows you to transfer value, money, something
Right.
of that I can. So instead, we've had to build these kind of side chains, banks, Interact transfers, ACH, call it whatever you want, right? Secure mechanisms, horse and buggy, right? Somebody that you trust, the local chief in the town that, you know, he's the person that you trust who's going to kind of do all the transactions between the
He's
villagers.
going to bless the transactions. Yeah.
Bless the we've innovated to find solutions that kind of work around this problem.
Yeah, that's a really interesting, that's a great way to, the internet is my favorite. Thanks for bringing that up. That's the best way to think of the protocol development for people, because we've all been through the internet. We've all seen, you know, DARPA created the first TCP protocol, right? And then it was HTTP on top of that, which allowed web pages to be built. So that was the second layer. And that took
Right.
like 40
Took a
years
while.
or 50 years or whatever it was. There's many years, right? 60s
Oh, yeah.
to the 80s to the 90s to then there started to become an economy on top of the internet, which we all know how that went. We're all investing using those companies now, right? And at Theta, the Mag 7 or like wouldn't exist without the internet. I mean, really, right? Like I think I could say that and confidently without being, you know, wrong. I don't think there's a single company in the Mag 7 that doesn't have, you know, the internet as its
Foundation
for existence,
Yeah.
right? Like
Sure.
And what we have happening on Bitcoin is a protocol level similar to TCP in terms of its not in terms of its functionality, but in terms of its stability and functionality from from a monetary point of view, right?
Absolutely. Absolutely.
And
So-
so yeah, go ahead.
Go ahead, Omar, you want to say something?
I was just gonna say what's coming after the protocol level is, you know, that's we're not even talking about that right now, today. We're just talking about the foundational level of what Bitcoin represents from a monetary transfer point of view. It's the internet of monetary transfer. Is that how
Absolutely.
would you
That's
say that?
exactly how I have to look at it.
Yeah.
It's the missing piece that builds out the rest of the internet. We've got everything else. We just don't have this piece. And now
Right.
we've got a technological solution that can bridge that gap. In the meantime, we're using Visa and PayPal and, you know, whatever, and Amazon, right, to kind of settle some of
Yeah.
your transactions. That's what there's been alternative solutions that have stepped in to help mitigate that, but every single one of them is centralized. You
Right.
have to have an Amazon account. You have to have a PayPal account. You have to have an account at the bank to do what you want to do. And the reality is the technology exists for me to have a peer-to-peer. I can, the same way in the physical world, I'd give Omar the $100 bill. I could also digitally myself, without a trusted third party, send Omar the $100 value of the thing over a peer-to-peer network. That exists.
Well, what if I didn't live in Mississauga and you didn't live in Ottawa? What if I lived in the, let's say I lived in Dubai and you live in Ottawa?
So
Then
the way,
you can't transfer because I have a bank account that's going to be local to the Emirates, and you've got a Canadian bank account. We can't do it. We'd have to go to PayPal, right?
yeah, you'd have to go to some other intermediary
third
that was
party.
going to settle those two transactions, right? That's how we've evolved today. And not to say it's broken, it works. It's just that how do we scale this? And if we fast forward a little bit and think about the world of AI, we're going to have all these autonomous agents, you know, all these different things talking to each other. How are we going to settle value in that world? Well, there's a technology that could now help us get there.
Yeah.
So I think governments and technology companies are starting to realize that there's something here. I mean, it's not by accident that, you know, the strategic Bitcoin reserve was announced, right? And now we have a crypto czar in the US. I think the US is starting to realize that there's real technological value here. Because we went, you know, Cam and I are kind of veterans in this space, right? And we've been through it. And the first 5 years, I wasn't there actually. I wasn't involved with it in Bitcoin that early. But the first 5 years, we were ignored. Nobody even knew who these Bitcoin, you know, weirdos were. The next 5 years was kind of an era where they were mocked. Okay, a bunch of guys, you know, chasing digital, you know, ether. And then the last 5 years, you know, kind of the COVID era, the Joe Biden era, the Bitcoin folks and the crypto folks were fought. They were aggressively kind of isolated and you know, Choke Point 2.0 is kind of a government program that was created to kind of isolate that group. It was fought, and then recently there's been some acceptance. So we've gone through this metamorphosis now, and I think we're at this point where I think people are starting to see the value of it, not just as a store of value, but of technological value.
Yeah, and you know, during COVID, with I pre 2020, I never recall having conversations with as we say normies in the Bitcoin world. I never recall having conversations with normal, you know, you know, like just regular people talking about the price of things going up and inflation and money printing and these words being talked about since 2020 when
Right.
the COVID money printing was, you know, astronomical, like, you know, it was unheard of, right? And it became mainstream, right, for people to start to talk about like, wow, my purchasing power is like, why are things getting so expensive, right? Like, why is this going on? And then the conversation coming around to like, it's like we were talking about earlier. It's not really about the price of goods; it's the value of your dollar, right? And I think that had
It's
a lot
becoming
to do with people's. Okay, well, you mean there's a solution here, right? Well, let's talk about that.
absolutely, absolutely. The other important characteristic of the Bitcoin ethos is time preference. So again, coming back to that concept of, you know, you have to Saifedean Ammous, who wrote a book called The Bitcoin Standard. It's kind of become like the go-to book, right, in the space. And he talks about the fact that you have to earn your money twice, right? You gotta earn your money. So you gotta go, you know, spend your time and energy to earn your money. And then you have to invest your money, which forces you to become an investor. Everybody's an
Yeah,
investor, right? Everybody
everybody
needs to
has
know,
to be a
everyone needs to know a professional investor, right? And the
right.
reality is, well, why? Why can't I just go earn my money and like put it under my mattress and I'm done?
Yeah, because it'll fade away to nothing, and we've seen that. Yeah.
So the concept of time preference is about going back to the basics of saving, right? Of me earning money and then that's it. I've earned my money and I just save it in a vehicle that actually preserves the value over time.
Hmm.
Traditionally, that's kind of evolved to become gold. Gold has kind of been the savings vehicle for most
Yeah.
people. But even gold has been highly manipulated, and there's, you know, question, and it's very difficult to deal with gold. Like, where do I put my bar gold?
Yeah. It's centralized, right?
Well, gold has a couple problems. A, it's not transferable. So if you wanted to go and send me, like I live in Dubai, you live here, you want to send me gold, not going to happen.
Yeah.
Secondly, it is also not a finite supply. The supply of gold increases 2 to 4% per year because more
Hmm.
and more gold is being mined every year. So that's a big differentiation between Bitcoin and gold.
Absolutely. Absolutely. And the other two we've already touched on. So no central authorities, completely decentralized. And I know this is a very difficult for us to kind of rack our brain against, right? What do you mean? Like, I'm so used to a world where my money is at the bank and the bank saves and protects my money. Like,
Hmm.
now I have to move into a world where it's not. There's no phone number. There's no 1-800 number for me to call if I can't send the money, right? That's a brave new world, but you
Yeah.
know, this is the world that we're entering and the technology exists now.
It's forcing self-sovereignty amongst people to have those conversations. It's in Bitcoin, we talk about the rules of Bitcoin it imposes its rules upon the world. And those rules
Right.
are just and they require sovereignty of your own you know, there's a lot of like philosophy behind the Bitcoin ethos that is a beautiful thing when you get into it. And hopefully we'll get into some of that today.
Absolutely. Absolutely. And one of the most important ones is there's no CEO. Right? And
Hmm.
I think this is part of the reason why the success of Bitcoin actually is here, because there is nobody. You know, Omar touched on it earlier, right? If Satoshi was alive, he would probably be in prison, right? Or killed. Because yeah, this represents a definite threat to the global monetary system, right? Because it represents a solution, technological solution, that has all of the hallmarks for what people are looking for. Global, saving technology, peer-to-peer, decentralized, unmanipulatable.
Yeah,
Sign me
and
up.
you have all these other, you know, I just really want to underline in this presentation, like the difference between crypto and Bitcoin. And in crypto, you have all CEOs and centralization in all of those. They all have a owner. They all have rules that can be changed. Bitcoin is one and done since the beginning. And
So
there
let's
has
go
been,
there.
go,
You talked about the beginning.
let's go.
All right. So this was the beginning, right? So a white paper was launched in October of 2008. Actually, it was, I think, Halloween, 2008. And then shortly thereafter, the first Bitcoin block was minted on January 3rd, 2009. And it's called the Genesis block, right? And it's a really interesting block because Satoshi actually minted it and put a message in there. And the message he put in there, or they or she, whoever they are,
Mm.
they put in there is this statement here: Chancellor on brink of second bailout for banks. So you have to kind of go back to that era. What happened in 2009, Omar, or 2008?
That was the U.S. housing correction, and what they did is the Americans took a lot of loans, which they handed out without much underwriting. They repackaged them, and they sold them to sovereign funds and wealth and investors around the world. Ultimately, they all blew up. So what happened is um, the central bank, United Federal Reserve, had to step in there and bail the bank outs. How did they do that? They printed a crap load of money.
So
They
we'll go back
bailed
to
them.
money printing,
Yep.
right? Okay, so he made this statement as if to kind of be cheeky to the chancellors here, are basically the heads of the Bank of England, right? Telling them, you know, you're bailing the banks out again. They messed up again, right? So this is actually the statement that was on the front page of the Times newspaper on that day, right? So unfortunately, another headline here as well. It's, you know, we haven't learned anything in, you know, since 2009, but that's a different problem. So, you know, the beautiful thing about Bitcoin as a technology is, you know, I don't have to trust anybody. I can trust the protocol, and I can go check this myself. So if I go to mempool.space, and everybody's welcome to try this themselves. This is actually just nothing sophisticated. It's just a blockchain explorer, right? So remember, the technology that underpins Bitcoin is a technology called blockchain, and all blockchain is just an open ledger. Anybody can read it. It just exists in.
Wasim, can you define a bit more what blockchain is? I don't think most people understand what is like. What is what do normal people think? What is a blockchain? Like, why is it important to me?
What does a bank do fundamentally? At the end of you have an account and I have an account. What is the job of a bank?
Well, to keep the money, to hold the money, to keep track of the money, to have a ledger.
Track. That's the ledger. So you said the two key words there. They're tracking the ledger, right? They're tracking, okay, Omar has an account, I have an account, deduct him, add him. That's it. That's all they do, right? You just trust both. You and I have an established trust relationship, as does Cam, with the bank that they will be honest in maintaining that ledger. And they will keep it so that you can't double spend, and that they can confirm that money leaving your account has entered my account, right? And you haven't sent the same $100 bill to me and Cam. It's only happened once.
My trust factor might be a little lower than yours, Wasim.
I hear you, man. I'm trying to keep this above board, right? But that's fundamentally what the bank does, right? I mean, forget the technology. Fundamentally, that's what a bank does. They just keep a ledger. I mean, you and I could do that, right? If I trust you and you trust me, then, you know, just give me the $100. I'll deduct it from my ledger. You put it on your ledger, call it a day. That's how trade is done, right? You go to a store and you typically buy, you know, goods, and they track your cost. They don't take the money right away. They could bill you 6 months from now, or you could settle 6 months from now. Okay, you bought this, I bought this, you bought this, I bought this, and we settle after 6 months. That's a settlement layer.
So we often refer to the Bitcoin, like Bitcoin is like, what, like, why would you fear an honest ledger? I think Jeff Booth says that. That's what this is. That's what Bitcoin represents. It's an honest ledger that anyone can see and access. And this, Wasim, is the ledger. This is the representation. This is the actual occurrence of blockchain being, you know, blocks being created. You talk about this because I actually can't talk too deeply.
Yeah, sure.
I can't get deeply into the technical stuff. That's not my forte.
You're right on, man. Absolutely. Like, this is exactly this is block. The last block that was minted 6 minutes ago. It's block number 888776. That's it. Right? This is the block. And each block is built on the previous block. It's impossible to change this blockchain. At least there's no technology. I know people talk about quantum computing and all of that, but, you know, software is software. Just like quantum computing has evolved over the last 15 years, we will find software that will make sure that we're quantum resistant. It's not really an attack vector at the moment. It could become an attack vector in the future, but we'll figure out a solution for it, just like we've done for the last 100 years on any technological problem we've hit.
Yeah.
So this is the blockchain. So I can click on this block and I can see, you know, the block details. They're all there. Okay, there's the block and there's the block details. This is exactly what's in the block.
So if I send you a transaction, Wasim, on the blockchain, on the Bitcoin network, I don't like to call it the blockchain. It's just a ledger. It's just a network. It's using blockchain technology, but people get all excited about blockchain like it's some big, you know, it's just a
database.
Don't get excited about the blockchain or the crypto. You know, it's just like we're just transferring funds, right? And it's being recorded in this, and so we could see my transaction in there somewhere if I sent you the funds. You could see.
There it is, right there. You send me $143. Thank you very much. As an example, right?
Yeah.
But the beautiful thing about this is if I click 0 up here and I want to go to the Genesis block, this is the first block that was minted on the Bitcoin network, right? So, and you can of course scroll all the way up to 888,000, right? The latest one that was minted 6 minutes ago. And if you look down here and you actually look at the actual description of, you can actually see that statement. So I'm not making this stuff up. It's right there. Anybody can check it and verify it. There's the first block.
So it's completely transparent, Wasim, yes?
Absolutely. And if I'll use another explorer, there's another cool explorer. It's called Time Chain Calendar, right? It's just another explorer. It's just another view of the blockchain. Like somebody's decided I want to build some technology to look at the blockchain. Same thing here. Latest block 88776. You know, it should be true. It should be the same one. And there should be no surprises here. The latest block. Everybody has the same view of the block. It's the same ledger. It's only one ledger. It's just duplicated all over these computers everywhere.
Duplicated over all of these computers everywhere. That's a very important point.
It's not only held at the Royal Bank of Canada, which none of us have access to, by the way. Like you
Right.
can't go to the Royal Bank of Canada and say, please give me the ledger so I can look at every single account and make sure they're correct. They will not give you access to that. Bitcoin does.
So that gets into nodes and mining and things like that. Are we going to touch on that in this presentation?
We can if there's questions. I don't really want to go there right now. It's a
But
little bit early,
it's
but
duplicated across, like there's not just one of these. That's the main key takeaway that I
at the
like.
moment there's 21,895 that are reachable.
What is
nodes.
that?
Nodes. These are nodes, duplications of the blockchain ledger that are
Got it.
available and reachable on the network. But there are many, 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 many more that are not reachable. They're just not advertised. Nobody knows where they are.
Got
And
it.
that's by design because you want to make it indestructible.
Right.
So I just want to just on that same topic that I was talking about, right? So everything here should be exactly what I just showed you in mempool.space, no different. And I can, again, use this beautiful technology and go all the way back to the Genesis block.
And there
Boom.
it is.
There it is.
There's the report. There's the
Look at that.
the news that was the actual. So that's like inscribed, if you will, or it's just written into the first block, which is this like this information. So it's always going to be there, right?
Always. Every single transaction on the blockchain will live on forever.
Mm-hmm.
It's indestructible. And that's
So
the
as
beauty
the
of it. It's all
transactions
digital.
become, as the transactions become more and more and more, because if Bitcoin becomes worth a lot of money down the road, you're going to trade fraction. You're going to have fractions of Bitcoin, and as more and more people get on the blockchain, more and more transactions will occur. This will require a lot of compute power and storage. So how does that all work, Wasim and Cam?
Yeah, absolutely. And I remember coming back to the conversation we had earlier that, Bitcoin is, or the protocol is a layered technology on top of the internet. Well, the internet runs on computers. We've been running on computers for the last 20 years. So can you imagine a life through COVID without the internet? What would happen to us as a species if we didn't have electricity and data centers and the internet and connected devices? What would our life look like? So you're absolutely right. I mean, yes. I mean, people argue that you can turn this thing off. Governments can turn off the Bitcoin network. True, they would have to literally shut down, find every single public node and turn it off. Because as long as one is alive, the blockchain lives on.
So
Right, and
basically, you have to shut off the internet to kill this thing.
So to kill Bitcoin, you effectively need to kill the internet. So
Yeah.
which you can do. I'm not disputing the fact that governments cannot, come together and decide that we're going to shut down the internet. But
But all
what
it
would be the
takes-
economic impact? Sorry, go ahead.
Yeah, the economic impact would be significant, destructive and devastating. And then all it takes is the game theory is that another jurisdiction will open up and say, all right, we're gonna allow this to happen. We're gonna be free. We're gonna allow an economy on the internet to exist, and they protect it, right? And you guarantee that like the global, unless there's like some one world government control that is able to
Right.
like control the entire internet and shut it down, that there are going to be jurisdictions that would show up in case like China tried this, right? They tried to ban Bitcoin mining, and what success did they have in that?
Yeah, and this is I often kind of look at technology from kind of two lenses, right? Like you look at the bazaar versus the cathedral. Actually, there was a book written on this called The Bazaar versus the Cathedral. And the bazaar is like a peer-to-peer network, people exchanging at a very small scale in microtransactions versus the cathedral, right? Which is really a monumental kind of central bank. Think central bank, think like RBC Bank.
Bazaar
Right?
is in like a market, not bazaar.
A market. Yeah,
not
yeah.
like weird. Okay, got you.
Yeah, yes, not bizarre, bazaar,
yeah,
as
yeah.
in like somewhere you do trade, right?
Got it.
And that's how we've evolved as a species, right? We've always come from that kind of bartering, system or market-driven bazaar system, right? Which is very low cost setup. You don't need much. You don't even need a table. You can put your stuff on the floor and display it, right? Versus a cathedral, which is very, very expensive to build, takes a lot of time, so they're slow to build. A bazaar is very quick to build. A bazaar is highly resilient. Right? If a fire sweeps through a bazaar, well, fine. We just set up the next one next door, right? Or if if the bazaar gets destroyed, well, you just set up the next one next door. A cathedral is a little bit more fragile. If one of the pillars falls, then you've compromised the stability of that structure. It may not fall, but you've compromised the stability. Look at Notre Dame that burnt down recently, right? Here we are, almost, what is that, 10 years ago, maybe at least 5 years ago, anyway, right?
Yeah.
Here we are, we're still built. I think they just recently opened it.
I went to Paris in the summertime. They had just finished it.
Right. So fire could devastate kind of these kind of central monolithic kind of infrastructures versus a peer-to-peer network that is highly distributed like this. It's almost indestructible.
So
just like the internet.
You're speaking to the security right now.
The security and the vulnerabilities and the longevity of it, right? Because there's
Yeah.
always arguments about, well, they can just turn it off.
And
True.
Mhm.
That's
we talk
not an
about
untrue statement. Yeah, go
well,
ahead.
we talk about three things, right? In Bitcoin, we talk about decentralized, and these things must stay true. Decentralization, secure,
Right.
and the third one I'm blanking on. Decentralization, secure, and
Those are the
um,
main ones, right? I mean, you need
decentralized and secure, and yeah, those are the main ones. But there's a third one, which is essentially
there's it needs to be governed by a set of rules, right? So there's no you can't change the rules of the protocol, right? So there needs to be some structure around how it operates.
yeah, I'm blanking on the third one there, but it's something like that. Yeah, it'll come back to me.
Okay.
What about the public nodes? So we have 21,985. I think that was the number of public nodes, right? So
Yep.
is the whereabouts of the public nodes known? If banks around the if governments around the world thought this was a threat to their, to the, we all know what happens when someone goes against the US dollar. It's been tried, and then the US dollar is the reserve currency of the world. If I was the US government, not that they would, because they've announced a strategic reserve, the Bitcoin strategic reserve, but could someone know where all these public nodes is and wipe them all out? Like, do they know where they are? Like, is it possible?
It's an insane task.
The short answer is yes, because they're public, right? So that means their IP address is available and inaccessible. So yes, you could target them. The interesting part is there's a little button down here called run a node. So you and I and anybody, right, can run a node. And you have the option to make it public or not public.
Okay, so if it's not public, then it's impossible. There's certain nodes you'll never know. Like you said, as long as one exists, you can't kill this thing. So essentially, you would have to kill the entire internet to kill this thing off.
And even if you did, like the blockchain can be stored. Like it's not like it's just a database. Like you just store it on a disk, and then
It can
once
go
the
dark
system
and come back.
starts up again, you just load it up and off you go. And then you synchronize and off you go.
So essentially, this is impossible to kill off then.
Oh, look, we just created a block right there live. Boom, boom, boom. Wow, that's what I was waiting for, right?
What does that mean?
Ladies and gentlemen, we've just minted a new blockchain block right there, right? Live, the network did it autonomously. The miners ran everything they needed to. I can even see who mined it. A company called Via BTC. And if I go
So
to the other
that means a
Explorer,
new Bitcoin was created. Is that correct?
that is absolutely 100% correct, Omar. Yes, that is absolutely one. Look, this and just updated too. So yes, I can click on this transaction now that just got minted just now. It literally says just now, and it has 2,633 transactions in it. And you're absolutely correct, Omar. The subsidy is 3.125 plus the fees, because whenever you transact, you pay a fee. So this miner via BTC just collected, $268,000 for that minting that one block in the last minute. And if they do it again, they'll collect another 260 plus
I
thousand.
guess more accurately, they received Bitcoin. They didn't receive the dollars, but
They actually receive, you're absolutely right. And this is how Bitcoin gets created, right? So every block, there's right now in the Bitcoin halving cycle that we are in, and you can see it here, it's called Epoch 5. The subsidy is 3.125 per block. We are at 19.83 million, Omar, which constitutes 94.47% of the 21 million. Black and white, the rules are well defined.
And as
Everybody
these
understands
halvings
them.
occur, the 21 million won't be fully mined until I believe the year 2140, correct?
2140 is the last block, the last subsidy that gets issued. But effectively, between now and 2034, 99% of the total Bitcoin supply would have been minted. So the last 1% will take literally almost 100 years.
Okay. I got a couple questions for you. And just questions that a lot of people
Yeah,
have.
let's pause here. Let's go for it.
Okay, so one, how do you see this affecting the current banking system? Because we've been banking the same way for centuries now. Now the technology has increased, but we've been banking the same way for centuries now. And then secondly, a lot of people are hesitant to invest in Bitcoin because they keep hearing that somebody's Bitcoin got hacked or this. So could you just say how are like if I'm investing in IBIT, for example, BlackRock's ETF, how do I know that's not going to get hacked? If I want to buy Bitcoin, how do I know it's not going to get hacked? And again, how do you see this affecting the banking system on a go forward basis?
Okay, you want to take that, camera?
I'll take a quick stab at it. Just the high level is like this is a peer-to-peer network. Self-custody is the best way to secure your ownership of Bitcoin. You want to take possession of your Bitcoin in what's called a cold wallet. That's the best way to do it. The safest and most secure. It does take a bit of a learning curve to understand how to do that. A lot of the financial industry is relying on, IBIT, like BlackRock's got their IBIT. They're holding their Bitcoin at Coinbase. So Coinbase is the custodial. FBTC is they self-custody their Bitcoin. So that's Fidelity's Bitcoin ETF. They're actually self-custodying it. They have a little bit of a higher fee, not much, just like marginally higher than IBIT. That's sort of the first thing I would say, is like self-custody is your most, the thing you want to do the most. And then maybe you want to handle the second part of that question, or the
Yeah,
next
and
part of that question.
I just add on the theft part, right? So there is no ever in the history of Bitcoin a known case where the blockchain has been hacked, right? That can't be said for any of the other cryptos out there. There's definitely been cases where that Bitcoin, actually even recently, Ethereum got hacked on certain things. But
So if
where
I
you see, yeah,
just to clarify, Wasim, if I hold my Bitcoin in a cold wallet, never been hacked.
it's
However, if
never
I
it's never been hacked. That's correct.
However, if I hold it through, let's say, IBIT, which custodians through a company like a Coinbase or whatever, then the possibility of being hacked is there for something like IBIT.
IBIT maybe not the best example, because IBIT is just an ETF, and as Cam was saying, like their Bitcoin that is associated with those ETFs
On
are
Coinbase.
custodied with Coinbase. Now the point here is Coinbase, right? If you have your money on Coinbase, then it becomes a honeypot. If your security is as good as Coinbase's, right? So your money is as safe as, it's no different than the vault at the RBC Bank, right? If the vault is secure at the RBC Bank, then I have some trust that my money is not going to get stolen. But banks get stolen all the time. Vaults get stolen all the time. So it becomes a honeypot. It becomes a target. So if Coinbase's security is not good enough, and yes, then there's absolutely a risk of your money being stolen. But this is what Cam is talking about, where if you do self-custody, the risk of your money being stolen is reduced, but it also increases your personal risk. Like you need to make sure that you protect yourself. Then you need to kind of ring fence your security, make sure that you've got that under control.
And
Because
that's like
yeah,
a discussion for a whole other
whole other
hour,
conversation.
and there's companies like Bull Bitcoin that are great. As Ivan was saying in the chat there, Bull Bitcoin, somebody that I personally use to buy my Bitcoin. I transferred into my cold storage and hold it there. That's a whole other conversation. I think for those who are interested, there's so much around Bitcoin in terms of investment, right? Like there's these proxy companies that are using Bitcoin as their like their product, IBIT, right, as an ETF based on Bitcoin. MicroStrategy is, we all know
The
what
proxy, yeah.
MicroStrategy proxy on Bitcoin. And so I think that we don't want to go too deep into that today. Perhaps maybe we can come back to that on another day. But like the security side of things, from the financial point of view, I think that's the main thing, is like you want to have ownership over this stuff yourself. And then
Yes,
and
self-custody.
then you can invest in these companies like IBIT or MicroStrategy, and you can do the degen trading thing, right? If you want to make the money in the alpha from trading those things. Understand why you're doing it though, and that's why we wanted to present this today. Is we wanted to really let people
Right,
help try to understand, why is IBIT or FBTC or MicroStrategy, like, why do you want to start thinking about these companies? Why may you want to start thinking about these companies? Because as soon as you understand the underlying,
right,
you then start to ask yourself, well, what opportunities exist here that are asymmetric to the market, because the level of understanding is deep to go through, right? In order to get your head around something like MicroStrategy and IBIT, right? And Bitcoin.
yeah, and we'll touch on it as well. I see Ronzi asking a question about how to go through it, so we'll touch on that in a little bit. We'll in the next few slides. But I just want to kind of just on this whole banking theft situation here, right? So, and the question, it's a very, very, very good question, by the way, right? So I can say a couple of things as well, just in addition to what Cam is saying. The technology has come, the security technology around Bitcoin has come a long way from the time it was the first Genesis block was minted. So now we have Bull Bitcoin as an example is a provider that allows you to buy Bitcoin and then self-custody Bitcoin. The tools for self-custody have come a long way. There's multiple keys that you can have instead of just a single key. There's inheritance software out there that allows you to think about, okay, how do I pass this money or this value to my next of kin? So there's a whole ecosystem of technology that's being built around this, and I think
And
what you'll
services.
see, and services there. So you will see that security will only improve over time, but it is absolutely central to the ethos of the entire. I mean, you have to understand, like, the people that built Bitcoin, that started it, Nakamoto, Satoshi Nakamoto, and the cypherpunks, they are cryptographers. They are security is central to how this entire space was built. It's like the foundational layer.
Yeah, they're
So
like the most paranoid, you know, cypherpunks. I mean, the word just says it. Right? All you need to know is cypherpunk,
that's
and
it.
then like, okay, these, you know, they were prepping, you know, essentially.
Yeah, there's two parts to this, right? There's security, and there's also, the ability for me to autonomously maintain my data. I want to have the option to share my data or not to share my data, right? And those are two fundamental concepts. So that my data has to be secure, and I want the optionality to identify myself anonymously or not.
Yeah.
Those tools don't really exist today. Today, you have to kind of show your who you are, right? Everywhere, wherever you go, you have to identify yourself on PayPal, on Facebook, on Gmail, wherever you are.
There's a question here from Ron. Can you go through the process of how to buy Bitcoin and explain what a cold wallet
Yeah,
is? I don't know
we'll
if we
go
can
through.
get too deep into
We'll,
that, but
we'll touch on it a little bit in a few slides, and I saw that. Yeah, the other question was around the disruption to banking. So I think that's a really, really interesting question, Omar. Right. So just on that topic. So I'm gonna
Yeah.
just talk on about one company, and this company is called Tether. And this company actually, it's a stable coin, and they call it the future finance starts here. So you hear the word stable coin a lot. It was actually even referenced in the recent announcement from the White House on how they want to evolve the strategic Bitcoin reserve and their stockpile. So stable coins are part of the overall narrative, right? So and this picture here, like they say, picture speaks more than 1,000 words. This says it all, right? This is equivalent to the example of me giving Omar $100 bill. Well, this is the equivalent $100 digital bill. This is exactly what that is. USDT is exactly that. It's the digital representation pegged one-to-one with the US dollar. That's why it's called USDT. It's USD Tether. It's the US equivalent, and you can actually see it. If I go to CoinMarketCap, which lists all of the cryptos, there's 13.05 million cryptos out there. There is Tether, and it's effectively one-to-one with the US dollar. And they do that, Omar. So you asked me about what the impact of the banking system is. Well, now I have an ability for me to do it peer-to-peer using a protocol. Actually, they use multiple crypto protocols, including Bitcoin, by the way, which they're working on. And you can now send money digitally over the internet, peer-to-peer,
what do you
right?
use as the receiving? How do you receive Tether?
It's just an app.
It's
You
just
can
an app, and then
just an app.
So once I receive it, what do I do with it? I can't
You
spend
can
Tether. I have to transfer it to.
It's just like me sending you Canadian dollars, and you want US dollars. So you would transfer or exchange your Canadian
And
dollars to
where can
US
I do
dollars.
that at a what kind of like in the app, like in the exchange, or
Yeah, most apps will do it, right? There's multiple apps in Canada. I'll give you a list of few that can do
so I
that,
attach
right?
it to my bank account and then transfer it over to my bank account if I want to do it that way.
Absolutely, right? So,
Yes.
and if you think this company is like messing around, this is actually one of the most profitable companies on the planet, right? So it's a private company, but if you actually look at, they are one of the number seven. I think there's the seventh biggest buyer of U.S. Treasuries. So Tether is actually one of the solutions to the U.S. problem for demand for treasuries, and they have almost 80% of their cash equivalents, or sorry, their reserves are actually maintained in treasuries. So look at this, Omar, right? We're used to fractional reserve banking, where banks, if you give them $100, they'll lend out $90, right, and keep 10. Well, so Tether actually does not use fractional reserve banking. They have everything fully collateralized and available to you. So their assets are 143 billion, their liabilities are 136. They actually have $7 billion of available equity, which they're investing quite aggressively, but it's available. If you want to redeem your money, it's right there. So when you ask me about the future of banking, look at Tether, study Tether, because I think this is going to be an enormously impactful kind of solution technologically, and it's going to really force banks to rethink, right? If especially amongst, and let's not look at the the boomers that are, I'll speak for myself, right? And I know Omar's a lot younger than me, so but I mean, listen, I mean, maybe we're used to using banks, but I can tell you the younger generation are much more savvy. They much prefer to send Interac. If they can tap their phone and send their money to their buddy, right? They would do that. If the technology exists, I'm sure they will use it. Oh, wait a second. The technology exists. Oh, wait a second. They're starting to use it. I wonder what banks are going to do.
They're going to start using it too. They're going to have to get involved, right? When they look at this company, they're employees of like 90 people in this company, and they are more profitable than BlackRock. They
This
made
is,
they made
yeah,
more profit than BlackRock last year.
this is the most profitable company on the planet that nobody knows about.
It's insane. Like people have, it's amazing. And they just moved their headquarters to El Salvador, by the way.
Absolutely correct, right?
Interesting.
And they're building a 70-story tower there for their offices. So they're going to make it a landmark, right? So anyway, so this is to answer that question, hopefully, you can kind of drill into this a little bit. And they're very transparent. And in fact, their website talks about transparency. Like you can't be any more clear than that. Like in contrast to a bank, which is maybe less transparent. Like, so everything they're telling you, every single thing that they spend and where it's being spent and on what network it's being spent. So full transparency.
So why do you bring Tether up in a conversation about Bitcoin, Wasim?
Man, you're reading my mind here. So think about the world, right, today. So again, coming back to that simple example of me sitting in a room with Omar and I give him a $100 bill. Great. Now we separate ourselves with distances, and now suddenly I need to use an intermediary. But what if you are in a part of the world, Omar talked about Dubai, but let's go to, sort of rural Africa, where, the person may have just a cell phone. They have some cell phone coverage, which is great because we know penetration of cell phones is over 8 billion today. So effectively, every single person on the planet has a cell phone, but not every person on the planet has a bank account or can even afford a bank account. So they're effectively, and this is where we have to think about the values and the ethos again of Bitcoin and why it's useful. There's a saying that says, everyone learns about Bitcoin when they need to, right? Michael Saylor actually coins that, right? People in the G7 in the developed world that we live in. Well, we don't need this technology. We have 100 other options for me to transfer money to. I can send you PayPal, I can send you Interac, I can send you this. Like, there's so many solutions out there.
Yeah.
But fast forward to the developing world, fast forward to the half of the planet that is unbanked, fast forward to the half of the planet that cannot participate in the global economy. Fast forward to the half of the planet that wants access to US dollars, physical US dollars, but can't. Well, suddenly they can.
Yeah. So yeah.
Think of the power of that, right? For 1 second. Like suddenly half of the world's planet that wants access to US dollars, they can't access the physical dollar. It's very difficult for them where they are. Could be banned by governments, it could be inaccessible, they would have to travel thousands of miles, they could have to buy it on the black market for ridiculous fees. Versus downloading an app on a phone, having access to the internet, which is becoming much, much more prevalent everywhere around the world, and being able to transfer something called USD digital currencies on an app that is secured by a company that is telling you very transparently that, hey, trust us, we've got all the money, here it is, you don't believe us, we've been audited, here's the data, and you can do it yourself, and you can own digital US dollars, and you can then take that USD and transfer it to a local bank, and they will give you physical US dollars or whatever the local currency or whatever you want. How powerful a concept is that?
Yeah, it's huge. It gives people the ability to access the world reserve currency. But what does that have to do with Bitcoin?
So Bitcoin, so they are this company here. As if you look at their current balances, they are using all sorts of different cryptos, and these are all just weird names, and Tron and Solana. It doesn't matter. They're all just different cryptos. One of the cryptos that they will use is Bitcoin, and I know I'm using the word Bitcoin and cryptos together because Bitcoin is a crypto, whether we like it or not. But not every crypto is Bitcoin. Bitcoin is extremely unique, right? If you actually dig into Tether and look at their overall vision of where they want to go, they are using these other technologies like Ethereum, like Tron, like Solana, because they function and they're fast today. But that's not really where they want to go. They want to build a solution only on Bitcoin so that Bitcoin becomes the actual platform that supports this and facilitates this global trade of the digital economy. So they want to peg it to the US dollar. The US dollar is not going anywhere. For those people in the room that, you know, that are the Bitcoin maxis that want to replace the US dollar, maybe not in my lifetime, maybe it'll happen in the future, but that's not part of this conversation. The conversation right now is there is a technology that Bitcoin represents that could anchor this kind of trade. And that's what they're working on. They're actually working on
they're using the
implementing-
lightning, they're using the second order effect, which is like this, they're an application on top of Bitcoin, which is the Lightning Network. But
the
maybe
Lightning Network.
won't get
That's
too much
exactly
into that. I feel like the Tether conversation is pretty advanced. I don't know, for people on our audience, and I think it's cool, it's awesome we're bringing it up, and these guys are Bitcoiners. I just feel like when you get into the Tether conversation, it becomes like, well, what are we talking about here? Like, they're using all of these cryptos as well, and I know they're Bitcoiner. I mean, you know, like
I see a question here from Ron Z, and why I bring up the Tether case, because I think he's hit the nail right on the head. Right? Is this similar to XRP? It is absolutely similar to XRP. The fundamental difference, right? So it's a technology, and actually is very similar technologies under the hood. The fundamental difference is this: the transparency part. If you go to Ripple and you try to do an auditing of how they do this, it's not clear how they do their auditing, and they can print Ripple at will. And in fact, I will show you. Right? If you go to Ripple. If you go to the coin market cap and you go to Ripple, there is, where's Ripple? XRP right there. If I click on Ripple and it tells me a breakdown of the supply of Ripple, they have, according to this, 100 billion XRPs is their maximum supply. And the circulating supply is only half of it. But here's the crazy part. This number can be changed. It's just software.
by the owners of Ripple.
By the owners of Ripple. So the trust factor, the transparency factor is not there. So the fundamental difference between Tether and XRP is one is transparent, and they are auditing and providing you that information, versus Ripple, which is not.
So is Tether like a service basically that provides you US dollars instantaneously?
That's exactly what
they have like a one-to-one. It's like a one-to-one exchange on there. It's really just a service to the unbanked, right? And they're making like billions on this, right? Because of the demand is so high. People use this. We don't use this. I never use this. I have no need, right? Like, you and I probably never use it, but the use case for this is massive, and people are using it significantly. But it's just,
so if you look at the U.S. government, sorry to cut you off there, Cam.
no, it's good. Go.
I was just going to say, like, the US government was talking about digital CBDCs, right? Central bank digital currencies. The US stopped talking about central bank digital currencies, and they see something like a Tether could be a good alternative. The Europeans are still talking about central
They're
bank
still
digital
going
currency.
for it, I know.
But in the American sort of psyche, they've changed the thinking to actually say, is this a technology that we can use, where we already have a digital asset that is pegged one-to-one with our US dollar? Why don't we just use this? Because it seems like it's going somewhere. Different way of thinking.
It's interesting. I don't spend a lot of time on the Tether. The Tether keeps entering the conversation, but let's keep going. I mean, we don't know how much more we can go here.
Yeah.
It's already 1 hour in.
All right, so let's touch on some other things, right? A couple of things here about the Bitcoin dominance. You hear about this a lot, right? So I just want to put it out there. Busy chart here. Everything in orange is Bitcoin since inception, right? Bitcoin was 100% of the crypto market, and over time, it's maintained its dominance, right? There's other stuff that's coming to the pipeline, and you can see that if you go to CoinMarketCap. All you have to do is you go to CoinMarketCap, and you'll see dominance, right? Bitcoin is 60% of the entire market cap, right, of 2.74 billion. You can see it here. Bitcoin is 1.6 and change. Sorry, trillion.
1.6 trillion. So it's trillion. The value of Bitcoin is roughly the same as the value of Google.
That's right. Right. So whenever you hear about, cryptos and Bitcoin, this is why I'm trying to highlight here is Bitcoin is different. It was the only crypto, is the original Bitcoin, and it still remains as the dominant Bitcoin, right? So at the dominant crypto. All the other stuff is great, but it doesn't move the needle. So just put that in perspective.
I don't think it's great at all, but it's nowhere near as great. It's okay.
It's great technology.
Okay, it's technology, but it doesn't. It's faulty in many, many ways. It really doesn't have a use case outside of a gambling casino.
I'm not going
to hold any punt. Like, I'm not laying. It is what it is. I mean, like, Bitcoin has a purpose and a functionality in the marketplace beyond just making money, right? Cryptocurrencies generally have no other use case that I can see other than a gambling in a casino. I don't see it. I mean, Tether doesn't have to use these multiple cryptos, you know. So anyway,
No,
I
it
don't want.
doesn't. You're right. I mean, the dominant use case right now for Bitcoin is a store of value, right? And the rationale behind that is primarily around the limited supply. So, you know, as we saw earlier, right? You saw that. So when I say we are, this is the green is the inflation rate of Bitcoin. We are towards 2140 hitting that apex of 0 BTCs. We will hit our 21 million, and that's it for the rest of eternity. No new Bitcoins will be minted. The network will only run on transaction fees. The miners will only make money through transaction fees. So we are today here around nine, and I showed you that earlier, right? We are 94. If you go back to time chain calendar, you see that the number of Bitcoins minted is 94.47 of the total 21 million. That's what this picture is showing. We are here. Okay. So next question I think is around investments, right? So let's pivot here a little bit. So now we get a little bit of, so as you see, like, you know, when you talk about Bitcoin, it's a little bit of a rabbit hole. You know, you can go so wide. We can literally spend the next day talking about, you know, how Bitcoin as a technology. But let's pivot. Let's talk about us. Let's talk about how do we invest and how do we use Bitcoin and how does it benefit us overall?
Let's go.
All right. So first thing is first. Well, what part of the world's total asset base does Bitcoin constitute? Omar, what does this picture tell you?
Very little. It's we're at Bitcoin is what 1.6 trillion, like you said, or 2 trillion. Compared to other asset categories, it's almost a nothing.
So now you have to kind of use your imagination a little bit, right? So real estate is a good example. So why do we invest in real estate?
Tangible, hard.
For
People
value,
see
it's
it.
a hedge against inflation. It offers an income because of rents.
So if you had an alternative that could give you all those things, particularly around hedge against inflation and store of value, would you think about it, consider it?
Yes, but real estate does offer income as well, right?
It does offer income, and there's, I think, technologies that are going to come very soon that will offer you income on Bitcoin too. It's not here yet, but I think those are things that are probably on the roadmap. But if you can just use your imagination for a second, just think about some part of this picture here moving into Bitcoin as a space. Like, let's just say even if 1% of the real estate market, we're not asking for much, 1% of the real estate market, you will almost double or triple your size of the Bitcoin market cap just by moving 1% of real estate. I'm not on bonds or any of these things, right? Just so you can see the potential here. We're still in very, very early days of the Bitcoin network.
If you had to put it in terms of a baseball game, what inning are we in here?
Top of the second there, Cam?
Yeah, sounds about right.
Okay.
It's early days, and this is why we're kind of trying to get this education out there, because, you know, there's a real opportunity here for us to really capture this early, and you can really ride this thing up. Because let's just think about simple market dynamics here, supply demand. If demand goes through the roof and supply is limited, what happens to price?
Goes up. So, for example, most of these large companies in the United States, Canada, around the world, they hold cash and cash equivalents on their balance sheet. If now Tesla's a little bit different. Tesla holds a bit of Bitcoin out. Tesla holds about roughly about $1 billion worth of Bitcoin. If some of these companies decide, say, you know what, I know we have a lot of cash. What if we put 1% of our cash into Bitcoin instead of holding actual cash? That would drastically increase the amount of demand for Bitcoin, and that's happening as we speak.
Yep, BlackRock's recommending that as from their investment point of view. What is it, 5% they're saying or something like that? Like that's now being talked about on presentations to fund managers in BlackRock. They recently this year, there's a slide where they're showing the decay of the US dollar and how Bitcoin represents a change, and they're actually recommending BlackRock, the biggest fund manager in the world. Like, you know, they own everything, right? Like they're making recommendations to their fund managers to start allocating to Bitcoin. So yes, it is already occurring.
Exactly what you just said. BlackRock recommends for 2% portfolio weighting, right? And what is the impact of that, right? That's what we have to think about, right? So here's 100% allocation to the S&P 500, right, without Bitcoin, and here's an allocation of 5% Bitcoin, right, over a 10-year interval, and you can see the impact of that, right? You're effectively doubling your money, right? That's based on, and what are they basing this data on? Right. So, I mean, this is not based on, you know, just some speculation. There's a couple of data points here. gold and Bitcoin typically have kind of followed a very similar pattern. They're kind of risk-off assets. Recently, Bitcoin has been trading more like
Yeah.
Nvidia or Tesla, like a technology stock, but typically it trades like gold. Gold just hit an all-time high. Bitcoin has not yet, right? And if you look at the performance of Bitcoin, Omar, do you want to go through this?
Yeah, so Bitcoin obviously has performed much better than every other asset category. If you look at the returns in the last 15 years, 147% a year. The Nasdaq being the second best performer at 18.4 is way behind. Now, I don't think 147% is sustainable because at some point it becomes, it would be worth more than the entire world. So that's not possible. So the growth rate will slow down, but as long as the adoption of Bitcoin continues, the rate of appreciation can be very substantial over the next number of years as more and more people, because again, being in the top of the second, not a lot of people understand Bitcoin. Not a lot of people use it as a store of value yet. When that tipping point occurs, and we're right there, I think this thing goes way, way, way higher in the future. And a lot of the Nasdaq companies will benefit. But look at gold's return, by the way, over the last 4.1%. Right? That's not much at all, right? But gold is not a finite supply. It has limitations.
Yeah, it's a new
Right.
technology, right? So it's Bitcoin's seeing that, hockey stick adoption curve happening, and
The S curve, yeah,
yeah.
in the adoption cycle. So actually one
But
thing that
one more thing I would add. Just look at those 3 years, 14, 18, and 22. The one thing that you have to deal with Bitcoin is it is going to be a very volatile asset category. So those
100%.
drawdowns are substantial. And look at 2018. You put 100
Mhm.
grand in and it goes down to $27,000. You're going to be pretty upset about that, right?
Yeah, so the rule of thumb around Bitcoin is, as far as I'm concerned, is you have to have a 4-year window. First of all, don't trade it, just buy it, dollar cost average into it, and hold it as a savings account, and you'll do very, very well. But if you're going to have a window of like, I might want to start selling this to start, utilizing some capital from it, have a 4-year view, and you'll do fine. Because the CAGR over any 4-year period, the minimum compound annual growth rate is like, I think we're in a really low point right now, just because it's been like 25% is roughly the CAGR, but we're in an inflection point right now where the CAGR is getting lower than it's ever been for the last 4 years because of this, because of the cycle we're in right now. And I think that's just about to change though. So, give this another 6 to 8 months, and I think you'll see that CAGR looking a lot different for this 4-year cycle that we're in right now. Would you agree?
Absolutely, yeah. The four year cycle is important. And in fact, people that kind of let's call it the class of 2020 that kind of came in the last cycle, they kind of came in around the $60,000 range. We're at 84 and change today, so they've only seen an actual slight increase to versus those that came in a lot earlier, right? So, so definitely a 4-year time horizon, you will be up. Is typically the cycles, but
And the
it's
cycles are
it's
not
it,
the Bitcoin
it
cycle. I'm referring to,
yeah,
sorry, Wasim. The cycle that I'm referring to is more the M2 money supply cycle, like the cycle of the credit, like the cycles
right.
that we see affecting the asset prices. Like that 4-year cycle, typically, you're going to be rewarded if you hold for Bitcoin for like 4 years.
Yeah, and I should be a little bit more sensitive to, saying definitely be up. Historically, if you've held it for 4 years, judging by this data, you have been
Mhm.
up, right? Now, does that
Yep.
mean it's going to be the case in the next for over the next cycles? Who knows, right? This is a new technology. It's every day is getting stronger, every day is getting better. But there, like any technology, like anything new, we have to be prepared for dips. And so I think if anybody kind of looking at owning any Bitcoins, yes, you definitely need a little bit more of a stomach, right? To make sure that you can handle these dips because they are significant.
Well, just don't catch yourself in a point where you want to sell in a year where it's down, right? That's the key.
Yeah,
It's
or
like, think long term on this. It's savings. It's a savings technology. Um, yeah.
absolutely, absolutely, yeah. And I think just one point that just to touch on here, Andrew's kind of brought up a good point about adoption, right? And how we're kind of the top of the second. Now, there is a limitation, right, around the total number of Bitcoins that is going to ever be minted, right? So there is a little bit of a sense of urgency around, like, if you want to actually have a whole Bitcoin, not that it's necessary, right? Then your window is shrinking. So that's just something to consider, right?
Well, it's getting
Um,
more harder. It's getting harder to.
it,
It's
it
getting
is
harder. It's getting more expensive to have that.
it is harder, right? So now if you kind of pivot
Harder and
to
harder to become a whole coiner.
Yeah.
a whole coin, right? So I just wanted to just touch on a couple of things there on that topic and to maybe answer Andrew or to highlight Andrew's point here, right? Is I think we often spend a lot of time talking about Bitcoins, which is great. There's 21 million of them. But the real unit of Bitcoin is not Bitcoins, it's actually Satoshis, right? And there are 100 million Satoshis in one Bitcoin. So the real and you will start, I think you're going to see the unit metric change on Bitcoin because the numbers are getting so big. So I think you will see over time it's going to be more important to accumulate sats or satoshis than bitcoins because it's going to be so difficult to accumulate bitcoins either because of they're cost prohibitive to have a single bitcoin or they're just not available,
Well,
right?
it's like
Nobody wants to sell.
that chart you showed earlier of like, 2028.4 Bitcoin buying a house, an average home, right? Eventually it'll, that's, what is that, 400, or what is that,
Right.
like, I don't know how many Satoshis that is, but it's not a Bitcoin. It's zero point 0.4 of a Bitcoin, right?
That's
I can't
right.
do the math that
That's right.
fast, but you know what I mean.
But
It'll be
the
40 million sets.
There you go.
40 million sats. But you don't need to have you don't have to buy a single Bitcoin. I think it's not like buying Tesla shares, right? Like you can do fractional. And the fractionals here in this context is a Satoshi. You can buy as many as one Satoshi. That's 1/100 millionth of a Bitcoin, which is
So
possible.
that roughly costs 1190 USD right now for one set.
Correct. And you don't have to guess, by the way, you can come to, again, time chain calendar and you can see it. Today, 1,195 sats per USD. So if you spend $1 to buy Bitcoin, you will earn 1,195 sats, today's prices. Okay.
Yeah.
And just again, just to close out Andrew's point, right? I just want to, so this is a picture of who owns Bitcoin. Like we talked about the 19.74 million. Well, how are they distributed, right? Like generally speaking. So a large swath of it is owned by individuals, right? But and a large swath of it has been lost. That's a very interesting one as well, right? People have literally lost their Bitcoins, right?
Like that poor guy in England who's looking in that landfill for his old hard drive, right? People
right.
like that.
Or they were early adopters and they've passed away and they know just that the wallet has never moved in 15 years, right? So that could be another example of lost. It's just basically wallets that have really never moved because you can see the wallets right on the blockchain. Satoshi, when he first started experimenting with this network, for every block that he minted, he was getting 50 Bitcoins every block, every 10 minutes. He has 1.1 million Bitcoins. Those wallets have never moved. So there's a lot of eyes on the Satoshi wallets because if this fella, this person, this lady comes back, we want to be sure, right? Like this person doesn't want to cash in because they're going to be the richest person on the planet. And then you can see that, there's a small pocket over here. This is the Michael Saylors and MicroStrategy and the Semler Scientific Metaplanet. There's a few other government stuff. And then there's a
I think
bunch
that's
that are
where
unmined.
that's where the real demand comes in for funds from companies, governments. That's where the real demand is. Individuals too,
So
but they have a lot more money in those categories, right?
absolutely. So this is where I think Andrew's trying to highlight, like, okay, we're kind of middle of the fifth inning here because there ain't a lot left, right? We've already told you, like, there's only 6% or 5.5% Bitcoins left over the next, 10 years that is going to get minted up until 2140. And most of it is kind of being chewed up by this block. So just wanted to kind of leave you with that. Okay.
Yeah. There's something really interesting about the amount of individuals that own Bitcoin, right? There's a lot to be said about that, but the fact that it is owned by individuals and not by one entity, right? Not by a singular centralized entity. It's owned by, I don't know how many people would own Bitcoin. What do we say? How many would own
Millions.
millions, right?
There's millions of wallets. I think
So
there's like
it's
somewhere like 10 million
distributed
wallets.
across many, 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 many people.
And many, many geographies as well. Right? We'll touch on a few examples of that. But let's talk about, so I want to answer Ron Z's question, or like, how do I invest in Bitcoin? Show me the process of how would I do it, right? So let's maybe touch on that. Like, how do I get exposure to this? Now that, okay, you explained it to me, it looks like it's promising. It gives a nice returns, right? BlackRock is saying put 2% in your portfolio. You should start thinking about it. Some allocation, non-zero, right? Okay, so let's look at the options of getting exposure to Bitcoin. The first and foremost is probably the one Cam keeps harping on is self-custody. Like just go buy the real thing, right? Cam, you want to touch on this?
Yeah, I mean, like you can buy Bitcoin on an exchange. Like you have Bull Bitcoin here, you have ShakePay. I bought from both of those, Coinbase, I've never used, but there's a lot of other, these exchanges, and you can go and open an account and link your bank account so you can transfer money in. And then with that money, you then go buy buy Satoshis or Bitcoin on the exchange. and then you've got the Bitcoin on your app, right? In your on your in their account. They're holding it for you, right? They're holding it for you in that ShakePay, or if for example, a ShakePay, you bought it. So you don't want to hold it on the exchange, right? For various reasons like security, for if something goes wrong where they have to they don't have you just don't know. You're trusting them, right? You want the idea with Bitcoin, the most secure way to handle this is to keep it yourself, and then you're in control of your funds. You can take it with you anywhere in the world. You can travel with your wealth anywhere. And so to do that, you need to transfer you have to transfer the addresses. You have to transfer the Bitcoin to an address that you have control over. And that's how you get it to yourself into a cold wallet. And how to do that is a topic for another conversation.
But that's one way, right? And this is actually the optimal way to get exposure to Bitcoin, is own it and self-custody yourself.
Yeah.
The other way to do it is through the Bitcoin ETFs, and this is new. It launched in January 10th of last year, and it's been the best performing ETFs on the planet. You can actually see them if you go to FinViz. You can actually see them now start to show up. If you look at the ETFs, global ETFs, and of course we recognize quite a number of them in the US markets, but there's many others globally. They actually show up. It's under crypto, but there's only Bitcoin right now. All the other ones, there's also some for Ethereum. Solana is trying to get licensing from the SEC, or approval from the SEC to get some ETFs validated as well. And so they might show up here. But critical mass, just like you saw dominance in the crypto market earlier, right, will always be Bitcoin, right? Those could be good tradable ETFs. I don't see them as long-term hold store of value type of ETFs, but Bitcoin is a different animal.
And they
And
have options on them now. IBIT, FBTC. I don't know about GBTC. I'm assuming it does too. I don't. I know that I've been writing options on IBIT. It's been great.
Yeah, and so Omar was talking about, you can hold Bitcoin but not make money on it. Well, I don't know. I'm not sure that's true anymore, right? Because if you apply the theta principles that you know how to use options trading, IBIT is one of the best performing options assets out there, right? That has nice volatility and actually pays quite well. So you could actually own some ETF, gives you Bitcoin exposure to the price action, plus you
Yeah.
can do options on top to actually create some income.
And so what they're doing, BlackRock, the IBIT ETF, basically they just buy Bitcoin to the dollar amount that they have shares being bought of IBIT. So it's like a 1-to-1 thing. They have to own the
Absolutely.
Bitcoin in the same amount that that people are buying it. And then the options market's great. Yeah, it's like you're making premiums on Bitcoin. Worst case scenarios, you own an ETF that owns Bitcoin, only Bitcoin. And the only thing to say about that is it's not being housed in your own cold wallet, or you're not taking possession of it. So there is the potential. IBIT hosts their Bitcoin at Coinbase. So if Coinbase somehow gets something compromised, they got liquidity problems, or they're being nefarious in some way. We don't know. Like, you're trusting them. You have to trust Coinbase. And so I wouldn't want to put all my wealth into, or a good portion of it into IBIT shares, for example. But it's something to be aware of.
Yeah. But there are people that do, because they don't want to deal with the self-custody headaches, right?
There really
said,
are, yeah.
I trust Coinbase, I trust BlackRock, if not, right? Let them take care of it, and I'll take my funds and use them in there to create income through the options. So that's definitely, you're seeing a lot of pull into the IBIT, or not just IBIT, but into this space in general. So ETFs is absolutely, and there's Canadian ETFs too, by the way. If you don't want the Forex hit, you can use the Canadian ones. All right. And then the next option is to use proxies. And probably the most popular one is Strategy or MicroStrategy. So this is an extremely interesting company, right? So Strategy is not a new company. It's been around since the 90s. It's basically a tech company. And fast forward to the COVID era in 2020s, it was basically a company on the verge of death, literally. Like, they had some cash, and Michael Saylor, who was their CEO, basically said, we're either going to have a slow death, or we're just going to prolong our death, but we're dying, right? So what do we do? So long story short is they took, I think it was a 700 million or something, whatever cash they had, and they plowed it into Bitcoin. and they decided to put Bitcoin in their balance sheet because they saw it as, you know, it's the only thing that's not a melting ice cube. Everything else around them felt like it was a melting ice cube.
Yeah.
And as a capital allocator, as a CEO of a company, he had to do something with that money. So you could either give it back to your shareholders, which didn't make a lot of sense because he's trying to save the company. He could buy back some stock, which, okay, fine. I mean, it'll increase the stock price, but it's not going to necessarily give him an alternative avenue to generate more revenue. You know, he looked at all the options. He bought treasuries. He looked at all the options, buy gold, etc. And then he landed on Bitcoin. And he said, okay, this seems to me, you know, it's a bit of a, you know, a Hail Mary. Let me try it because I have nothing to lose. And he did. So it was a bit of a gamble, and it has literally transformed the company. It is now the 140th, I think, last I checked, biggest company on the planet. And here's the crazy part. It's the 10th most traded company on the planet from an options perspective and from a stock perspective, which is phenomenal, right? Like, you know, they're up there trading with these Mag 7s with the SPYs on some days.
Yeah, because they've taken basically they've turned you know a stock price, a stock into a Bitcoin proxy, like it says up there. And so the volatility that, because Bitcoin's volatile, the options market on strategy is what is it? Is it 4 times volatility, 5 times volatility of Bitcoin?
No need to guess. You can go to their website, strategy.com. They
Oh,
actually publish it now. Today, their
cool.
MNAV, their multiple MNAV, which is what Cam is talking about, is 2 times Bitcoin, right?
Bitcoin.
So the Bitcoin holdings they have on their balance sheet, they own 499,000 and change. It's worth 41 billion and change. Their market cap today is almost double that. Right? So they have a multiplier. So they're leveraging they're leveraging on top of Bitcoin. So you have a leverage play on top of Bitcoin, which is already volatile. Certainly not for the faint of heart, but it's an option that's out there, right? That, you know, so for us, if we're talking about how to invest in Bitcoin, we cannot not bring this up and mention it, that it is an option, and it's actually for some people a very viable option.
Yeah, just going back to what you know, I don't think Saylor really took a gamble. I think for him it was a very calculated, very strong conviction play for him. And I think that he decided to move into Bitcoin from a long time. I mean, you know, have you heard him speak? I've not. You know, if you listen to him speak, he's been at this Bitcoin thing for quite a while and gone quite deep on it. And um yeah, you know, there's a lot to be said about strategy. What they're doing is not a lot of people understand why people are trading it. It's very kind of like people are just gambling on it because they see the volatility. But strategy is like a volatility amplifier. So they've taken and volatility is strategy. Saylor refers to volatility as health, right? The more
It's
volatile
vitality,
you
yeah.
have, the more health you have. And this volatility is harnessed in the options market. So the premiums are insane. You know, and then, yeah, it's an interesting game. I think this is something we should be talking about in the Theta community, or could be talking about in the Theta community. Let me put it that way. More and more in terms of like what's possible with a company like this, and understanding how they're coming to acquire this Bitcoin, which is fascinating. I don't know if you want to get into that too much, but you got a lot of notes there, Wasim, so sorry.
No, yeah, I think you touched on all of them, right? We've covered them all. So volatility is vitality. That's exactly what Michael Saylor and the strategy team are trying to do. They're trying to create volatility because for the option, what do options traders want, right? I mean, that's kind of the first thing, you know,
IV,
data
yeah.
trading 101, right? You want volatility. If you don't have good volatility, then you're not going to get good premiums on your options. So you want volatility, but you want stability as well, right? So you don't want necessarily to go into the GameStops because they give a great volatility, but do I really want to invest in GameStop, right? Because if I get assigned, I'm stuck with GameStop and I could be writing that thing all the way down. So I need something that if I do get assigned, if I'm writing a naked put, then at least I have some way that is something that is backed by something, right? And in this case, you're backed by Bitcoin. And if you believe in the Bitcoin ethos, right, then this is definitely a play for you. The other thing I just want to add to what Cam is saying is MicroStrategy's products, volatility, and their capital engineering that they're doing, their engineering jujitsu, as he calls it, is not really targeted to the average retail investor. It's really targeted to the bond markets, right? It's really targeted to kind of pension funds, etc., that are looking for exposure to Bitcoin. They can't buy Bitcoin. They're from a regulatory perspective. They don't necessarily want to buy the ETF, but they want to participate in this asset that is generating, you know, a 60% CAGR year on year for the last 15 years, right? I think you saw 147 is in one of the charts that we showed, but you know, on average, it's generating, you know, a significant amount of returns. How does this bond market, which has been depressed for the last few years, how do they participate in this? Well, MicroStrategy gave them a conduit to do that. So that's kind of the target market that he's after. It's not me and you. But if you know, if the average retailer can benefit from the volatility through options trading or some other mechanism just by holding MicroStrategy outright, why not, right? So it's available to you. You know, you can buy it on your favorite Interactive Brokers platform and just hold it because it's, you know, you can see the performance. It has beat. You don't often hear this on Wall Street, but it has beat every single stock in the market.
Yeah.
So,
And it's the only one right now of all the companies that we're sort of looking at, or, you know, a lot of the companies, I wouldn't say all of them, but that is above its 200-day moving average.
yeah,
Like,
yeah, and
honestly, like everything is below its 200-day and MicroStrategy's not.
it's right there, yeah. And it's recently joined the Nasdaq 100, and there's conversations about it potentially joining the S&P 500. There have been some changes to the accounting rules, so the next earnings report is going to be very interesting for MicroStrategy because they're going to apply the new FASB accounting rules, where they can
Right.
actually record their profits on Bitcoin. Before they were
Right.
not allowed to report profits on Bitcoin. Their average price, and I think you can see it. I think their average price, if you go to you can see the history, like everything
Oh
is.
man, yeah.
This is all the history of their acquisitions. They've listed everything, right? So you can see, you know, every single BTC purchase they've done. But the average price, if I'm not mistaken, I think it was like 60,000 or something. I don't know where. Somewhere on their page of purchases, I think it's over here. There it is. Average cost per BTC 66,000.
6,000. Okay. Some
So
Bitcoin's at 84 roughly right now.
right. So the next earnings report, from an accounting perspective, they are now allowed from FASB rules accounting to actually show profit.
Mark
So
to market, basically.
mark to market. They can actually now show that this is a revenue for them because they're holding on their balance sheet. They could
So,
liquidate it any time.
okay.
Not that he
Okay.
plans to.
All right. So we just had a call yesterday, Omar and Danielle. I was lucky to be a part of the DCF model, right, where you're analyzing the discounted cash flows. So if you had, Omar, a revenue shift from, not a revenue, but well, this is the thing with MicroStrategy. It's not creating revenue. It's more like almost a holding. It's a bank in a way. It's holding Bitcoin. But if you're, I don't know, what do you call it? Income, profit?
Yeah, it'll be an income. That's how they're going to report
It'll
it.
be an
It's income.
income increase of almost $20,000. How did we calculate this, Mosim? Like, how do you calculate? Can we do a quick DCF on this thing for fun? Like, if the average Bitcoin price that is on the balance sheet of MicroStrategy is $66,000, and that was what they were allowed to tell for their accounting, right? It was $66,000. They weren't allowed to mark to market. They had to report their purchase cost of Bitcoin, right? So their average
That's right.
purchase cost of Bitcoin is 66,000. That's what their valuation is based on.
Mm-hmm.
Now they're going to be able to now they're going to be able to say, okay, well, the accounting rules have changed. Now we can report $84,000 as our Bitcoin holdings. That's an increase of 20,000 roughly dollars per Bitcoin.
Per
And
Bitcoin.
how many Bitcoin do they have? 500,000?
500,000, yeah.
500,000 times 20,000 is math.
Omar's the numbers guy.
You're the calculator, the walking calculator, Omar. What is 500?
That would be 10 billion.
$10 billion. What does that do to the share price of MicroStrategy? Just like, do you have any idea? Like, do we have, like, it's not going, I mean, you know, how's that gonna play out? Is that an immediate, just like, oh my God, like, look at the multiples on this thing, look at the PE ratio, like, and all of a sudden the stock price just goes through the roof, right? Like, these are the kind of questions, this is what's coming down the pike here. And when is that earnings date, Wasim? It is,
Yeah, I think they just recently reported, so probably another couple of months from now. So I don't know if they're going to report the next cycle with the new FASB rules but it'll be done this year because they are positioning themselves for S&P 500 inclusion. So they need to show profits. Right now, they're not a profitable company.
so it'll be the June earnings, right? Or in July, I guess, the earnings will.
Yep. So we'll be watching that carefully. We'll maybe do another Bitcoin update then and just focus on strategy and see what happened with them. But it'll be interesting to see what happens to their stock price. Ron has a good question here, right? Are you saying the MicroStrategy, their book is worth half the market value? Well, in fact, and it's not me saying it, that's what they're saying, right? Their assets are worth 41 billion. if you look at all their Bitcoin at current prices, right? So that's their enterprise, but their enterprise value, which includes also their software business,
The software business isn't worth a whole lot. Yeah, so I think Ron is
not much.
yeah, you're 100% right, Ron. The market cap is 77 billion, and the value of their Bitcoin is worth 41 billion.
So there's a premium for owning MicroStrategy, and that's the premium, right? So you could buy spot Bitcoin; it'll be cheaper than buying MicroStrategy. But if you choose to buy MicroStrategy and ride this, kind of capital, kind of financial engineering that he's doing, and reflect that in the stock price, who knows if this is going to yield a better return than just owning Bitcoin. So far, he's outperformed Bitcoin. And again, like, don't take it from me. Like, this is, if you look at the charts, right? This is where I got the chart from. So, so far, Michael Saylor, since inception in 2022, when he started accumulating Bitcoin, he has significantly outperformed Bitcoin. So you could buy Bitcoin spot, you'd be perfectly fine, right? But you could be a lot better if you bought MicroStrategy.
Yeah, and that's probably one of the only companies that's going to beat Bitcoin in terms of returns going
For
forward.
now, right? I think it's engineered in a way that, yes, like he will always have an MNAV, and there's a lot of disputes, and Wall Street is really trying to figure out how to value this company. And I think you will hear a lot of noise if you step into the MicroStrategy,
Community.
tornado. Yes. Okay.
Tornado. Yeah.
A hornet's nest, right?
Yeah.
Okay.
I call it a community. Wasim calls it
Fair
a
enough.
genre.
So the last thing I just want to touch on, and I know we're way over time here, but it's
Yeah.
good discussion, right? So, okay, the other options here on how to invest in Bitcoin, other proxies. So there's many other Bitcoin companies, or companies that own Bitcoin on their balance sheets, including Tesla, by the way. Bitcoin mining companies. There's Bitcoin merchants. PayPal and Square are starting to now also delve into the crypto space, and they're offering Bitcoin products. As well as just crypto exchanges. But I'm trying to walk you through the less and less pristine way of owning Bitcoin, because here you're owning the company, and then you kind of have to, Bitcoin is obviously a very small portion relative to the rest of the company.
Yeah. Buy Bitcoin, hold it. There you go.
Keep it simple.
Simple.
All right. Couple more slides just on the future of Bitcoin, and we're done here, right? So where are we going, and what's changed, and why is this an update, right? Well, I just want to touch on this because I don't think we can finish the conversation and not talk about this, right? Because this is kind of the, they talk about the Sputnik moment, right? Where we kind of started having the battle for space dominance, right? I think what just happened on March 6th was the crypto and Bitcoin in particular Sputnik moment, right? So what happened? And this time, and I've been in the space for a while, but I can truly say my gut feel, hopefully my data is correct too, this time it is different, right? The momentum is different. Like there was a point in time where it was just retail investors and degens, as Cam likes to call them, right? So there was just a bunch of crazies, right, owning this Bitcoin thing, and nobody paid attention to. And then suddenly the corporates started showing up, Michael Saylor and Semler Scientific and Metaplanet and a few others, right? And then even there's conversations that GameStop might take some of its, I think they have $3 billion, right, that they want to allocate. That could be their saving grace to get them out of the hole they're in.
Strategy.
Right? Yeah, just the MicroStrategy playbook, right? Start playing that on the corporate landscape. And then institutions started showing up, the IBITs. And I think once the BlackRocks and the Fidelities and all of these institutional investors showed up to the party, it's almost game over. There was only one missing piece, and that was sovereign wealth, governments, right? So, and that is the last shoe to drop. I think the last, maybe one more to go still is banking. So they've already issued an adjusted kind of ruling, SAB 21, yeah. SAB 121, right? It hasn't been legislated yet, but I think if that changes and banks can suddenly custody Bitcoin, I think the entire ecosystem is in place.
Yeah. Yeah, it's a guidance framework for banks to start holding Bitcoin. It's not like a rule. It's more just like, it's not even a blessing. It's just like, okay, if you're going to do it, here's what you should do. That's that SAT thing you're talking about, or whatever it's called. SAB, I can't remember the name, but the bank.
Yeah, SAB 121. Yeah. So just to spend maybe a couple of minutes on this, right? So, the US announcement came out, the White House, they have, strategic Bitcoin reserve. They're going to actually start holding Bitcoin. They're not selling Bitcoin. They're not buying Bitcoin, but they're not selling either.
So this is great. So this is wonderful. Okay. So like a lot of the Bitcoiners were very, very upset about the strategic reserve when it was this crypto reserve and everything like this. So I'm not going to go into the whole history, but here's the like the big takeaway. I hope I don't steal the thunder here. But with the strategic Bitcoin reserve in the US, they have a one-way valve in the Bitcoin reserve, and it's only goes in. With the crypto reserve, or whatever they're calling it, crypto stockpile, it's a one-way valve that only goes out. So the crypto that they have on their balance sheet is not going to grow anymore, but the Bitcoin can grow more. Like, it couldn't have been a more Bitcoin positive strategic reserve.
And if you don't believe them, well, here's the beautiful thing. Because they're going down this path, it's all public. So I can actually see that, right? So if you want to go and audit the US government around their Bitcoin crypto holdings, well, here it is, right? You go to Arkham. Omar, are you seeing this? This is their Bitcoin holdings, right? It's about 200,000. But they own a whole bunch of others. Oh, look, they own USDT. How interesting. They own a whole bunch of other stuff, right? And a lot of this is actually confiscated. So if you're a bad actor and you have, and the US government comes after you and they happen to take your money, like this guy here, Uranium something or other finance. So the US government came after these folks. Uranium Finance hacker seized funds. Wonderful. They seized their funds. They put them in this stockpile, right? This digital asset stockpile, right? This piece here. They sell it or trade it or whatever they want to do. They manage it, and then they eventually buy Bitcoin with it. Eventually. And I think that's where it's going to go.
That's how it's set up. Essentially, that's how it's,
But it's auditable. This is the interesting part, right? So you
cool.
can actually start.
This website these websites are amazing. I didn't know this existed.
Yeah, happy to share this stuff, man. Absolutely, right? So in the spirit of Bitcoin, everything is open, right? There's nothing to hide. The software is open, the blockchain is open, everything is available and accessible to everybody to look at themselves, right? Don't trust anybody. The whole ethos is based on no trust. The protocol is the only thing you trust. Okay, so that's another example of how the world is just about, this is what I call the Sputnik moment, because suddenly, right, you have, it's very little ways of tracking the treasuries or how the government kind of in real time, and I'm talking real time tracking, like sure, and the US publishes their reports maybe a month or 2 or 6 months later.
So the reason you mentioned Sputnik, let's just use that, like just flesh out that metaphor a little bit, right? Like the Sputnik was during the 60s, the race to the moon, right?
Yeah.
Cold War. So the Russians they launched what Sputnik was, a satellite or
they were the first to space, right?
First to space. So that really spurred on the space race, which we know where that went, right? Like innovation, technology, growth, investment, etc. And so that's why you're referring to this moment as the Sputnik to the world, right? So all of the other governmental organizations, governments around the world are looking at this as, holy crap, they just launched a satellite. We better get our space technology together. Right?
The global race is on. Right. So how that, and keep in mind, like the backdrop here is there's only 6% of the Bitcoin left to be mined. So whatever Bitcoin you want to extract from the existing network, you're going to have to find it and have somebody sell it to you.
You're gonna have to sell it on the open market. Yeah. Or
right?
You're gonna have to buy it on the open market.
So what does that go in? So suddenly if demand is going to go through the roof and your supply is limited,
what does that do to the price?
What does that do to the price? Those are the questions that are being asked. Nobody knows. Maybe it goes to zero. I don't know. But I'm just saying, like, supply demand economics tells me it's going to go up. Okay. Last chart here on that note is, all right, well, are other countries following suit? And I'm sorry, last chart. So if you look at what other countries are doing, that's exactly what they're doing, right? So if you look at the number of countries, there are other countries following, and you can go to this website and I'll show it to you.
Like El Salvador.
Like El Salvador, right? And the beautiful, like El Salvador actually is, in this case, El Salvador is the leader. The US is the follower, right? So if you go to the El Salvador they have something called their Bitcoin office, bitcoin.gov.sv, and they also have a mempool.space. This is El Salvador's balance sheet. This is their treasury, right? So again, no surprise, the blockchain is there because everybody has the same ledger. They see the same blockchain. But here is what the El Salvador government owns in Bitcoin. They own 6,122 Bitcoins worth this much. They just added 8 in the last, they buy 1 a day. They've added 8. Sometimes they buy a little bit more when they're a little bit more, like example, last 30 days, they have 41. Almost, sometimes when the price dips, they buy a couple more. They're a poor country. They don't have a lot of money. They can only afford 6,000. The US has 200,000, right? In contrast.
MicroStrategy has How many? 500,000.
500. And if you want to see that, you can come to this website. It's kind of a cool website. You can see that. Here's the countries,
Hmm.
right? Here's so El Salvador's there. They have 6,000. I think this is a little bit delayed. It's not real time, this website, but
Mhm.
you know, you can get a feel for. So every time I come to this website, there's only 2 countries on this list. There's El Salvador, and I think the other country, I think China was there, and then Ukraine for some reason, right?
Interesting.
Bhutan just came online. Bhutan is a very interesting country. They have 13,000 Bitcoins. They did it all for zero money, or effectively zero money. It was all mined. They have no
Oh,
money
wow.
to buy Bitcoin. They set up mining operations because they have a lot of water,
Wow.
and they started minting. They've been doing it for 4 years quietly,
Wow.
and they have 13,000 of them. The UAE is another one that's not on this list. They also have some Bitcoins, and then other companies. So you can see the list of companies. I keep coming down this list, and I see every time I come to this website, the list grows. This
Hmm.
list seems a lot longer, right? And you can see like the Bitcoin mining companies. There's some Canadian names in here. Canada is actually a player. Okay,
Cool.
so that's that. And there's sports teams, and there's restaurants, and there's definitely the ecosystem. This is why I say the this time is different, right? Because this is the first time I see that all of the ecosystem is on board and everybody's talking about it. And hopefully, you know, you manage to catch some before you know, we lose them all, or lose a bunch more, or mine
Or
them
you're
all.
gonna have to buy them against the you know,
That,
UAE or something like that, you know?
that's right.
The line that everyone
Okay,
gives you, buy Bitcoin at the price you deserve. So the one last question, guys, and this is the $1 million question I think everyone has. Where do you see the price of Bitcoin going in the future? Now, I know it's very difficult to determine that, but what is your opinion? You know, let's say 3, 5, 10 years from now.
I mean, I know that again, supply demand economics. I've spent a ton of time, right? And just on that, maybe it's a good segue to our last closing thought here, right? And I'll come back and answer that question, Omar, right? So in our lifetime, we spend about 80,000 hours working. That means you're going to go spend time and energy, and you're going to earn some income for that. So you want to store that time and energy into something that is going to keep that value, so you can use it when you get older and you can't work. Unfortunately, today we have to invest that money. That's the only way for you to maintain your funds. So if there was an efficient way to do it, right, such as a technology like this, I think you owe it to yourself to kind of do a little bit of work yourself. Maybe spend 100 hours or so, you know, try to understand the space, try to understand this protocol, and see if it can work for you as a savings technology as well. Because it's starting to work for many others, and I think you owe it to yourself to kind of spend a little bit of time on it. And with that, right? And so this is kind of why we're doing some of these sessions, is just try to get the message out there. And yeah, you know, you've got resources within this community here to kind of help you, right? Feel free to knock on our door. We'll be more than happy to talk about this stuff all day. But to answer your question, Omar, right? I think coming back to the fundamentals, right? And the fundamentals are, you know, if I can bring it back to you know, this chart here, right? So if I bring it back to the fundamentals, which is there is a limited supply, and if we believe in supply demand economics, right, and there's going to be a finite supply and potentially unlimited demand, then that means price should go up. And you know, and if you look at, you know, let's look at the crypto market again, right? And if I look at the crypto market, the number one asset is Bitcoin. It's trading at 83,000. The next one is Ethereum, right? Which has a market cap of, what is it, 8%. It's trading at $2,000, and everything else is just peanuts. So there's a massive difference in price between the number one crypto assets and everything else. In price, I'm talking.
Well, more importantly, the market cap. The price doesn't matter so much. The market cap matters.
Sure, but you're asking about what's going to happen to price over time, right? And I'm saying the market cap, you know, as we also touched on right earlier on the potential for this asset and where it could go, right? It's only a 1.6-1.7 trillion dollar asset today. This is the universe of the addressable asset base that it could pull from. So if the market cap increases and the supply is capped and the demand is through the roof, then logically speaking, price should go up. Now, up to what? Okay, well then you've got a whole spectrum of numbers, right? So Michael Saylor believes it hits 13 million by 2045. Cathie Wood, I think, is somewhere in the realm of like 1 million by 2030, I think she said. Tom Lee is on the books on, you know, he's north of, you know, also 1 million plus. And then there's a plethora of other, Samson Mao and Adam Back, and everybody's got a number. But every number I can tell you is a hell of a lot more than 84,000.
Right, and I think simple supply and demand would agree with that, because as you get more and more demand, and more people understand Bitcoin and understand it's a great store of value and all the other things we talked about, there's only so much supply that we have, and eventually, that causes a higher increase in price. If there's more people who want something than there are available, the price theoretically goes up.
All I know is when BlackRock and Fidelity and all of these institutional investors and the pension funds and the sovereign states show up to the party, something's going on.
Yeah,
right?
and you get more and more wide-scale adoption of.
They've done their homework, right? They're not showing up to the party just because it's a passing. This is not. We're not talking the tulip bloom here, right? Like back in the. This is not one of those, right? So, and I know people keep talking about the Ponzi schemes and this technology is going to zero. And actually, there's some truth to that. Like cryptos will all go to zero, right? I think that at the end of the day, if you believe in Bitcoin as a unique type of crypto, independent and different, maybe uses similar technology, some of these other things, but it is fundamentally different because of its ethos, because of its limited supply. All these other ones have a CEO and do not have limited supply. So they're great. Maybe some of them may end up as good technologies, but they will never replace Bitcoin as a store of value. So if you map any crypto to Bitcoin, every crypto goes to zero.
So Bitcoin is the crypto to own. Everything else is secondary.
Absolutely, right?
You can gamble all you want on them, but
yeah,
if you want to invest, then there's only one choice.
It all started with Bitcoin and it will all end with Bitcoin, right? So it doesn't mean that you won't have one or two other cryptos that survive that may become a dominant technology in certain slivers of specific use cases, but it will never be a store of value. There is no other crypto out there that is vying to be the store of value. And in fact, don't take it from me. When Trump first came out and he talked about the strategic Bitcoin. It was on a weekend, I think, if you remember, Omar, right? He came out and he said, we're going to do Ripple and Cardano and Bitcoin and put them all. And he said, we're going to create a Bitcoin strategic reserve or digital stockpile. And even like CEOs like Brian Armstrong that runs, Coinbase that deals in a lot of these cryptos, he said, no. Bitcoin is the strategic reserve. Everything else is like a digital asset. Like you have to segregate. They're not the same thing, right? So he was educated a little bit. And when they came out on March 6th and made the announcement, they actually differentiated, as I showed you in that press release, right? There is a difference. They did not lump them into the same thing. There is a strategic keyword, Bitcoin reserve, and there's a stockpile, right? Stockpile for me means I kind of see like a pile of stuff over there that I can kind of take and mine and use and trade and sell and create money from and value from, and I can use it for my strategic Bitcoin.
It's a generous term for our crypto, to be honest with you.
Hey, that's what they came up with, right? And there's some value there, right? I mean, some of these cryptos do trade and you can get some value. Okay.
Oh, no question. Yeah, I know.
All right, Omar. So we spent a fair bit of time here. So we should take some questions or we're
yeah, if there's any questions, guys, right now would be the time. I want to thank both of you guys so much and your for sharing your wealth of knowledge when it comes to this. We really hope that you guys gained a lot from this. This is how great investing is done, is truly understanding what you are investing in, why you are investing in, because when prices go down, and they inevitably will, you'll always have ups and downs, but the trend is going a certain way. We want you to always have that confidence. I'm investing in something that I truly believe in. So yeah, I can't thank you guys enough for joining us. Any questions, guys, let us know. Thanks, Thomas. This has been one of the best calls I've ever been on. Very informative. Thanks, guys. Absolutely.
Thanks, Thomas. I'm just showing here some further reading if you're interested, right? So these are good resources. Just take a snapshot of that, and of course the video will be posted. So if you guys want to refer back, you know how to find us. So
yeah, the slides will be uploaded, and the video will also be uploaded into the portal. You'll get that. I just want to say one thing. If you're hearing this call and you're wondering, well, that's a lot of information. What do I do next? Like, I can imagine the wheels spinning. How do I get Bitcoin? Like, how do I just take your time? There's keep reading about it. It took me that's 100 hours, at least of research to start to get my head around it. So don't feel like you should take a 1 hour course, 1 hour session and be ready to go and start doing this. It's just not how it works. It's a complicated system to get your head around at first. But once you do, it's well worth it. It's well worth the time and energy that's spent into learning, and you'll learn a lot about money, yourself, life. There's far-ranging effects that this protocol has on on investing and in life. So I'd encourage you just to take this as a stepping stone if this is the first time hearing about it, but I'm sure it's not for most of you.
Excellent. So we got some questions. Ron says, any web links that you guys want to share? Also, guys, we're going to make this call public. It's going to be posted on YouTube. So if you want to share it with any of your friends and family to enlighten them on the case for Bitcoin, it will be up on YouTube in a short time frame. So any links, Ron, why don't you shoot us an email? We can send you some links if for anything.
Yeah,
I'll package everything I just shared today, and we can send those out. Sorry, go ahead, Cam.
No, those links for the were amazing. Those websites. I don't know if you want to share. If you could maybe throw them on a. I know.
Sure. Yeah.
There was some good stuff in there, like the meme pool stuff, and those are great. So thanks a lot, guys. It was a pleasure to be here. Love talking about Bitcoin. Let's do it again soon.
Yeah, we need to do another update, Omar. I think maybe in 6 months or so. See you then. Ask me about the price then, but I think we'll be in 6 digits by then.
Absolutely.
By the end of April, we will be.
All right, guys. Thank you so much. So Ron, we got your email. Fantastic. If you could send that off
I'll take care. I'll take care of it. No worries.
Okay, guys. Thanks so much. Have yourselves a great weekend and watch for this on YouTube. Share it with friends and family and make an informed decision. Thanks as always. We'll talk soon. See you guys. Have a good weekend.
See you guys.